Okay, so if you spent time in this space, you've probably heard about people going long or short. What they're really referring to in the crypto space is this thing called perpetual trading. We call it perp trading for short. Now, here's the way it works. What you're essentially doing is you're making a bet, a gamble, if you will, on the speculation of a certain asset. In this example, let's use Bitcoin. Bitcoin is currently $100,000, not in real life, but in this example, what you would do is you would take your money and you would say, I bet $50 that Bitcoin's going to go up. And so when you're perp trading, you're buying $50 of Bitcoin, and if it goes up, then you get to take those profits whenever you want. If it goes down, then you have potentially less money and you lose all your money. So how's that any different from day trading? Let me go ahead and show you on the whiteboard. So here's my $50 right here. Now, Bitcoin in the example is currently $100,000, which means that this $50 is not going to get me very far. So with perps trading, the benefit of it is I get to borrow some money. This is called leverage from the platform. Now I can borrow it in like 2x, 5x, 10x, 100x. Some platforms offer all the way up to 500x. So I could take this $50, I can do a 10x leverage, and now I can trade with $500. Now I don't get to keep the extra money that I borrowed, but I do get to use it as a bigger position. So now I can get a much bigger percentage as the price of Bitcoin goes up. I have $500, I'm gonna bet that Bitcoin's going to go up. This is called a long position. And that position is I'm going to enter my $500 at Bitcoin being $100,000. Now I'm betting that Bitcoin is going to increase in price over time. As Bitcoin increases over time, my $500 might turn into $600, $700, $800. And then I'll get to keep the profits minus the amount that I borrowed. Why would anyone not go all the way for 100x and borrow with a whole bunch? Here's the downside of this, right? The more that I borrow, the closer this little line gets. This is called a liquidation line, right? So if I borrowed for 2x, my liquidation line could be a little further down, maybe 92,000. If I borrow 100x, my liquidation level could probably be like 99,000, right? I can get liquidated easily. Now, what is liquidation? Liquidation means that all my money goes back to the house, right? So if Bitcoin comes down after I already said it's going to go up, and it goes up, but I don't take my profits and don't close the position, it comes back down and it hits this liquidation level, all my money will then be gone. That is what we call a liquidation. This operates in reverse as well. So if I wanted to bet on Bitcoin going down, that is called a short. And then my liquidation level would be on the other side. If I bet on Bitcoin going down and it actually goes up, then I will get liquidated at that target. Now, there's a lot of people who do this often. There's a lot of creators who will tout being really good at this. And if you want to learn how to get good at this, I suggest you go check out those pages. I'm not the one to teach you how to get good at this. I will also say that there's a lot of outside factors that are outside of our control that make trading a little bit harder. There's a lot of risk, a lot of reward, but always be sure that you're not playing with money that you can't afford to lose.